Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Thanks for inviting me on your show.
Hilliard, you went to some interesting conferences. Could you tell us about them?
So I was in New York last week, and I attended the BCA Research Conference, which is actually BCA is actually a Canadian research, probably one of the tops in the world. They do macro research on the economy and the markets, and they have this conference every year in September. Usually it's in New York. Last year it was in Toronto, and I was invited to speak at it last year. It was it's a group of people from all over the world, about 300 people, and they have people like me, but they also have more famous people like Janet Yellen last year, and this year Stephen Pelosi, and then they have a bunch of people that talk about the markets and the economy, and there's always interesting insights at a conference like that. And then after that, I attended on the weekend a conference on what's called modern monetary theory, which is sometimes called MMT. And the premise of that movement, it's almost like a movement really, is that governments can spend and should spend in deficit continually. So the idea is that because the governments can issue their own currency, like the United States and Canada, most countries in the world, they can continue to spend more money than they take in as taxation, and that money goes into the economy and stimulates the economy. And taxation is used to control the amount of money in the economy and to prevent inflation taking hold. So it was a very interesting conference as well. It's like about 5 days of conferences, probably too many days of conferences, but lots of insights.
So the idea then is just what? Endlessly print money because that'll cover your bills?
So what happens is the deficits continue to pile up in the government sector, but because the government sector can handle the liabilities of the debt that's being built up, the debt continues to grow. But really, they look at the debt as a record of how much spending in excessive taxation has happened over the decades and over the centuries, and they have a pretty strong argument, because when you look at the debt in Canada and the United States is much, much bigger than it was, say, 100 years ago. But we're all still here. We all still have a good economy, and things seem to work. So the concern about, we don't want to burden our children and our grandchildren with these debts. The deficit must be deficit must be eliminated. The budget must be balanced. That politicians often emphasize during an election campaign is really not very accurate, and it gives a very distorted view. The act of deficit spending, is what puts money into the economy, which allows people to thrive and prosper and keeps the private sector going.
Well, you take a look at Canada, the U.S., Britain during the Second World War. Obviously, the governments are spending a lot of money, but they didn't run out of it.
They didn't run out of money, and they were still on the, at least to a degree, they were on the gold standard. There was a connection between the currency and the gold standard at that time. But in 1971, the connection between the gold standard and the currency of the United States was severed forever. And so now gold's trading at $1,500 US, and at the time it was trading at $35 or something like that. So the value of the U.S. dollar has dropped by 95% or something like that. And the world seems to carry on and everything seems to be fine. Now, the debt levels after the Second World War were extremely high. And some countries like Germany were never able to pay back their debt. But other countries like Canada and the U.S. were able to not pay back the debt, but handle the increased debt servicing costs without trouble. So anyway, it was a fascinating weekend, and because what they're reacting to is the normal economic theories that are out there don't explain what's going on very well at all. So in their view, the modern monetary people, their explanation of how the economy actually works is much more accurate. And from that point of view, whether you agree with deficit spending or not, you'd have to say that they're on something, because the explanation that they give seems to fit the reality much better than the normal mainstream economics. It's called dynamic stochastic general equilibrium model, which has essentially very little connection, if any, with reality out there.
We'll have more with Hilliard MacBeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, during your travels and conferences, you ran into Anthony Scaramouche, the Mooch, who I guess gained some notoriety that, 10 days of working for President Trump. But mostly he's known for his management role with Skybridge, managing billions of dollars. What was it like meeting him in person?
Well, he's a very interesting character. I'd seen him on CNN, and I had the impression that he was, just kind of a self-promoter kind of guy. He got into the White House as the director of communications, but only lasted 11 days, as you said. And but he had been a Trump supporter for quite a long time, so he was one of the keynote speakers at the conference. And he had some really valuable insights that I was surprised. I didn't expect much from it. I thought he'd just be sort of entertaining. He tried to sell his Skybridge hedge fund, but the deal fell through because the regulators refused to approve it. It was his Chinese entity, HNA, that was going to buy it, and the deal fell through. And since then, the HNA group has gotten into some financial difficulties. So anyway, he's back at the hedge fund. And what's interesting about that, I think, is that his message in the talk was pretty simple. He said, Trump is nuts, to put it kind of shorthand version. And he has to go, and it's likely that he'll be either forced to resign or he'll voluntarily resign before March of next year, well before the election. And then there'll be an interim president put in, probably Pence or somebody like that. And so that means there'll be a Republican primary to find a new candidate if Trump resigns or is forced out. And so I get the impression that Scaramouche might be considering himself as a possible candidate in that primary. But he had lots of insights, and what I think is significant about that is, as a hedge fund guy, he's looking for people with big money. Minimum probably $10 million is his minimum probably, and almost all of those people are Republicans, and many of them would have been Trump supporters. So for him to openly break with Trump started about a year ago, I think. And then to be publicly calling for his ousting him is a pretty significant event, and doesn't bode well for Trump's longevity in the White House.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, the New York Stock Exchange looks like it's melting down today. Nothing but big red block letters on Bloomberg. Showing the numbers. Any idea about what's happening?
Well, it's late in the cycle, and in fact, that was the title of the conference I attended last week. Was late cycle investing, and they had several of the market gurus talking about what to invest in, and they were pretty much fundamentally, universally pretty bearish, thinking that the market, after 10 years, it's the longest run without a correction. Correction is, some people define it as a 20% drop. It's the longest run for a long, long time, probably going all the way back to the Second World War. So it's now more than 10 years and 6 months roughly. So that's unusual. And there's a lot of problems in the fundamental internals of the market, like the earnings of corporations, which is the key driver of the markets in most cases, have been flat for the last couple of years, except for share buybacks. But the problem with share buybacks is that they increase the amount of debt that a corporation has. So companies have been borrowing money to buy back their own shares, to shrink the number of shares, to make the earnings per share look stronger. But it doesn't really. It's just an optics thing, right? It's not a fundamental thing. So the recovery in the economy, which should have kicked in by now, has been very mild. There's been a recovery for the last 11 years since the bottom, but it's been pretty weak. So compared to other recoveries. So at this point, people are worried, and it might just be that people look at the market and say, you know what, I've had a great run, and it's September, I guess it's October now, and because the numbers year to date have been extremely good for many of the U.S. investors, and so to protect their record, because that's what they care about more than anything is their annual numbers. They decided to sell and lock in the profits and wait till January, February, but they also might be concerned about the what's going on in the White House with if President Trump is forced to resign or decides to stay on and gets impeached and then has to resign, they might be worried about the market. Because the last time that happened, 2 times ago was Richard Nixon, and the market went down 50% from the time they started to talk about impeachment and to the point that Nixon resigned. It's about a year and a half, and market was one of the worst bear markets in the history of the stock market.
For people invested, again, is it watch and be conservative, or should you bail and just hold on to cash and see where this all settles out?
So the big thing is the U.S. market, right? So the Canadian market, as your listeners will know, is got problems of its own, concerned with the housing bubble bursting and with the oil and gas industry, primarily, as not to mention the auto industry, which is Ontario's main export. The U.S. market is very expensive. It's sort of detached itself from the rest of the world stock markets, and has got to be much more expensive than the rest of the world. And then so it depends on where you're invested. So if you're invested in the U.S. market, I think it's important that people re-examine their exposure to that expensive market. But other markets in Europe, Japan, and other parts of the world are actually pretty reasonably priced. And in some parts of the market, the stock market isn't really that much more expensive than it was in 2009 during the financial crisis. So it really depends on where you are, and that's where a review at this time would be really important. But I wouldn't just sit back and drift into it. Some changes could be necessary, especially if people have invested in ETFs, exchange traded funds, because they tend to be very heavily weighted to the most expensive stocks in the U.S. market.
I noticed gold was up more than $18 in this market. Again, are people looking at precious metals as more of a safe haven than an investment?
Well, one of the things that we talked about modern monetary theory a minute ago, and some people, sort of talk about it as being helicopter money, which isn't quite accurate, but it's a pretty general view. And so in the instance where the term helicopter money refers to just sort of literally dropping money out of helicopters to help people stimulate the economy by giving them money to spend. And of course, that would be inflationary. So it would hurt the value of the U.S. dollar, and it would help the people that own gold, because the price of gold would go up. The price of gold and the U.S. dollar are kind of on opposite ends of the teeter-totter, or one's the inversion of the other. So if the U.S. dollar weakens in value because they start flat out printing money to try and stave off a recession, then the gold is seen as an extremely good thing to hold as a safe haven. There aren't that many places, and that it was interesting in the conference because I sort of listened to people talking about where's a safe haven. There aren't that many safe havens available. The cash is terrible because it has no return. The bond market is extremely expensive, similar to the stock market. So that leaves, sort of sitting in cash and suffering with zero return, or buying things like gold.
Hilliard, anything else we should be taking a look at today?
Well, I would keep an eye on that, on what Scaramouche talked about with the ousting of the president. That would be a very significant event, and he claimed. I talked to him after his keynote address. There's about 5 of us talking to him in the hallway afterwards, and he claimed that there's quite a few insiders in the White House, in the military, and in the intelligence agencies that are so fed up with what's been going on that they're either wishing for him to be gone, or maybe even going a little bit further and actively trying to figure out a way to get rid of him. And if that spreads, if these Republicans and plus the insiders start pushing him out, then there's going to be it'll be a major event, and that could create a real buying opportunity in the stock market that people should be ready for.
Hilliard, thank you so much for chatting with us.
Nice to talk to you.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.